time now for another edition of PatternCast Market Talk. This is where we take various futures assets and take a critical look at them, a critical thinking look, a statistical look, and give you our best opinion on what we see. So what is it, Don? What are we seeing today in the Nasdaq?
Well, it's funny because you and I were talking earlier, maybe a couple hours ago, and we were in deciding how we wanted to tackle this topic because the Nasdaq has made a move that seems historic. The last 7 or 8 trading days from the low on the 3rd of June until the high today, it seemed to me that was a historic move. You know how sometimes you'll see a move and it just kind of looks important. You know, it's strong one way or the other. Or if a move is going sideways for a long time, it feels like it's taking forever to break out. Well, that's, to me, this morning felt like something significant was happening with the Nasdaq. So when you and I were talking about this earlier, after we were done talking, I went and did a study and found that the move from the low on the 3rd of June until the high today, that particular move under the particular circumstances that we were talking about has happened 35 times in 20 years. The problem is that almost all of those occurrences of this very sharp move, you know, where you're not breaking out of the high over the prior month or two, that kind of sharp move, not breaking new highs, and the percentage of the move, all of this combined with the type of violence of the move in terms of the average intraday ups and downs, 35 times centered around really 11 or 12 years ago, very rare, and when it does happen, it portends downward, and the average move down was about 7% over the next 5 to 10 trading days from the highs that we just saw over the last week. Now, the last day. Now, what I found interesting about my work was when I talked with you, you also did some work that indicated very similar results.
That's right. When you described the condition, I said, oh, well, that sounds kind of like an evening star or an inverse hangman or something like that. Although the conditions that you're looking at are very, very specific. And with PatternCast, we do this sort of pattern matching over a wide range of data and try to find these patterns. But the thing is, if you go and take the generalized look at this pattern, which is called an evening star, and I know that Thomas Bukowski has done a lot of research. This is one of the top performing patterns, candlestick patterns that exist, called the evening star. It's ranked number 4 of all the possible candlestick patterns with an average pullback or bearish reversal of 8.7%. Now, the interesting thing is that you told me what you found was the average reversal just from a statistical look, from this sort of pattern recognition thing that isn't something very well known. This is something PatternCast found.
The work that I did with PatternCast was looking at statistical patterns and sifting through 5,000 rows of data or days of data to find this particular type of move. So what I found was interesting was that the PatternCast work and this candlestick work that you're talking about, both of those confirmed an idea, which is that the move to the top today at 7,600 would have been a good time to short. Now, you also talked to me about volume profiles, and that's not not the same as the candlestick, is it?
No, it's just another way of looking at the market from a supply and demand type of scenario. And it showed rather definitively that where we hit the top here was right at the edge of what's called a volume node. And that means that is an area of very high resistance, and it pulled back right from there. And then the kind of move it made very sharply down is the kind of move that is normally made once a move off of a volume node comes, it gets into this what I call a volume well, or this lack of volume, and price tends to move very quickly. Now, all of this stuff is something that PatternCast predicted based on just this sort of conglomeration of these small little patterns that we input, and it kind of assembles them into something that it then identifies a pattern.
This was a new scan that I put together looking at a whole new set of variables from anything else that we've done before. And I did this specifically for the move that we saw over the last 8 to 10 days. And so I tried to replicate in the algorithm this type of move and then looking at this specific type of move as a new scan. Now, let me ask you this about the evening star. Is that a common pattern or is that an uncommon pattern?
No, in terms of frequency rank, it's in the lower third of occurrences.
Yeah, because what PatternCast found is that this particular move, 35 times with most of them clustered around 2008, this kind of move is rare. I mean, we're talking about not once and not even once a year. You'll go years and years and years, and then they kind of get grouped together, and they did in 2008. So I think it's fascinating that something which is so rare based on PatternCast's algorithm finding is also rare based on the candlestick charting that you've done and the volume profile work, and yet they all, even in their rarity, are pointing to the same sort of move, back down.
That's right. That's right. Where a lot of people are thinking, oh, it looks like we're reaching for new highs. We're going to break out soon.
Yeah. So the average move back down from the high, the intraday high, would be 6.91%. So just, this is, call it 7%. So from 7,600 down that percent, you're talking about, call it 7,100 would be the suggested move down over the next 5 to 10 days.
Right, right. And that's interesting because that almost is coincident with the Bukowski research, which looks at literally millions of charts. But this is from equities, an equities point of view.
Yeah.
So we're talking about futures. He's talking about equities. And the average move down over the next 10 days, which would occur about 72% of the time, is 8.77%.
Wow, it's even bigger. The way I look at this is as follows. 7,600, when it hit that mark, with that trigger at 7,600, that would have been a time to say, okay, I'm stepping out of this. Now you're down 100 points from there as we're recording this video. Well, actually, say 80 points from there, 90 points. And I would say, to me, now I'm curious philosophically how you feel about this. To me, that's a winning trade. I mean, if the signal is generated, you get 100 points down, and it happens in the first day, that's a victory. How do you feel about that? I'm just curious philosophically where you stand on that.
It is a victory, but when you start stepping back and you look at the whole context of this trade over the next several days, it's saying that a very high percentage of the time when this pattern occurs, it can result in a total move of 7% by your numbers and nearly 9% by the Bukowski numbers. While I'd be inclined to take that profit right then and there, I would be more inclined to perhaps set or move my stop down,
right,
and then see where it will move.
Okay, so yeah, and I agree with that because I think that if 7,600 was where the signal's generated, which it was, and we're looking at possibly 7,100, there's a lot of points in between that you could take advantage of. So I guess in agreement with you, I would say a stop for no loss, break even and let it ride and see where it goes over 5 to 10 days.
Now here's the interesting thing with the volume profile. We're actually right in the middle of one of these volume wells or lack of volume. And the typical behavior when that happens is that it tends to move all the way through the volume well. And so we're only halfway through. There's probably a very high likelihood that it will continue through to the next volume node.
So I guess a lot of things are in agreement here. PatternCast, Bukowski, the candlestick work, volume profile, all of these things are saying at the very minimum, now's not the time to load the boat to go long for the kids' college education.
That is true.
All right, man. Thanks for the conversation.
Take care.